Hello and welcome. You're watching Know Your Company. I'm Harsh Saita, your host, and today we're going to be talking about FINO Payments Bank. Why FINO Payments Bank? One, there is plenty of talk around technology and banking, and FINO has been at somewhere at the periphery of it, or is it at the center of it? And that's what we'll try to understand better. But essentially, it's a bank where plenty is happening. They're converting from a payment bank to a small finance bank. They have applied for that license. How quickly does that license come will be the other big question. But it could well be a turning point in the way you look at the business as well. From the highs of the IPO price and the list price, the stock is trading now at a substantial discount, while profits over the last 3 years have compounded at a fairly healthy rate. And therefore, you want to start to understand whether this business has started looking interesting or not. So first question that I really want to know is that how much can the existing business grow by? You have your traditional business which they do at this point, and I'll explain that business to you. And thereafter, the kicker will likely be the small finance bank license, where they go into lending, and how that journey goes along will be completely different, and that will be a different lever both in terms of valuation and growth. The second piece is what's the outlook like on commission-based income. What do they do in commission-based income? One, they do remittances. These days, for remittances, say for example, you have a house help who you pay 20,000 rupees to. They have to remit some amount or some part of that amount to their village. Earlier, they used to take the help of someone like a FINO to make that payment to their village, and their parents or family would collect it from an outlet of FINO. But not anymore. With UPI really well entrenched, you could well see that remittance number has come off, and which is what in some form or shape also impacts the business. Is there a substitute to that, or is lending the only thing? Then of course there's Aadhaar enabled payments. For example, all the government related subsidies and incentives are now done through Aadhaar related payments, all done over UPI. And then there's micro ATMs. Who uses that? Who uses ATMs anymore? Or rather, there's been a sharp reduction in the usage of ATMs, and therefore does that also impact the business? Competition in loan referrals. That's the other risk, right? So they've ventured into loan referrals, and then you have these large players, a Paytm, a Paisabazaar, who have come in and are disrupting, and they are all online. None of them are offline, and therefore, is that business really seeing pressure? What changes with a small finance bank license? Now, this is the big question, because you want to know whether the small finance bank license adds risk to the balance sheet in a substantial form, and if they are lending, what is that risk? Because if you are buying into the stock or you are already invested, you want to know what the risk will be of getting this license and how they intend to lend. Now, the fifth question is, how quickly are you looking to get a small finance bank license? By one, I mean an SFB license. How quickly do they get it? How quickly does the strategy unwind as soon as they get it? Do they already have a strategy in place or not? And what happens to the promoter holding post the SFB license? Promoters currently hold around 75% through an entity, single entity. That structure may have to unwind at some point. Now, of course, that may take a year or two, but what's the thought process behind that? And the last question I want to ask them, where are you investing at this point? You're generating cash, you're a profitable business. Few businesses within the payments technology startup space are actually profitable, and this one is profitable. So where is it that they are investing that nearly 100 crore odd of profit that they are making? So all of that and more, but first let's understand what the business is all about. I'm going to start off with what FINO Payments Bank does as of today. The core business of FINO Payments Bank is digital and payments. That's what it essentially is based on. They've gone deep into rural, set up micro ATMs, and I'll explain this, and they have done digital through banking. So they do remittances, and then they provide financial services. So basic banking, remittances, financial services. Within basic banking, they allow you to maintain a current and savings account. They enable fund transfers, and they help you check your bank account through their app. which is all digital, all UPI. They've linked that entire stack to UPI. But what FINO cannot do is they cannot lend. Because they are a payments bank, they have a payments bank license, they absolutely cannot lend. So that is where the small finance bank license comes into play. They've applied for it. Earlier, there was no intention to do that. When I spoke to them at the point of listing, they said, we don't intend to lend at all. But that seems to have changed over the last 3 years. What has changed there is what I'd want to know. How they operate through an asset-light model, and it's phygital in nature. So one, they attract the customer into what is called a micro ATM. You'll have Kirana stores which will have a simple micro ATM machine which allows you to insert your card, enter your PIN, and check your bank account balance. Once you check your bank account balance, you can withdraw from it. Say your balance is 10,000 rupees, you can withdraw 2,000 rupees. But there is no ATM machine there. It's actually the Kirana store owner who gets paid a fee, and 2,000 rupees is handed over by the Kirana store owner to the customer. So it's a very unique concept in that sense. And they have nearly 20 lakh touch points and merchants who they have tie-ups with. And therefore, they're one of the largest micro ATM players in the country at this point. I want to understand, can that continue to grow at the rate at which they've been growing? In terms of customers, well, they serve low-income individuals, migrants, small shop owners, and rural consumers. Basically, the target customers are customers with limited or no access to traditional banking and traditional bank branches and traditional banking channels. Once the customer is onboarded, then there is a simple app through which the customer can transact. So once that attraction is done, then the customer can transact through the application. So it's a phygital model. It's asset light because it does not require the company to open ATMs or open branches. That is not required given the way in which the model is structured. So where does it make money from? Let's understand it bottom up. FINO earns money mainly, one, through transaction-based fee that's on your screen. Then it's interest income. Mind you, these customers maintain balances. They may be very, very small balances, but they maintain balances nonetheless. And what happens is FINO has access to that money. That money gets parked with the RBI, and the RBI pays an interest out to FINO, which may be a very, very small or a thin interest, and therefore the net interest income may be very, very thin, but nonetheless, that is income for FINO. So that's interest income they make, and then they make money on commissions. Any withdrawals, depending on the type of account you have with FINO, any withdrawals you make, any remittances you make, all of those get charged, and along with it, any loans you take. So the loan syndication that they do, any insurance products that get sold to you, all of those come through commission. So you have 85% of the revenue coming in from merchant commissions and fees on transactions. Then you have interest income from investing customers which invest in customer deposits in safe instruments, which FINO invests in safe instruments. And then there are commissions from selling insurance, referrals, value-added services, and the like. And that's where all of the almost 85% of the top line essentially comes from. Let's talk about the exact services that they do. One, they do money transfers, and this is mainly domestic. Then they have Aadhaar-enabled withdrawals that they do. They do UPI and bill payments for their customers, savings and current account maintenance for customers, micro ATMs, cash withdrawals, deposits, does both, withdrawals as well as deposits. Debit cards and prepaid cards are issued by them or are enabled to be issued. Insurance and gold loan referrals are made. And then there is CMS, which is cash management services. Now, what is cash management services? And this is a new opportunity for them. Basically, if you are a store, if you are a Kirana store, you have lots of cash with you. What they provide to you as a service is they will pick up the cash from your shop, deposit it into your account for you. That makes life easier for you. And there are a few players in this cash management services business. It's a difficult business to do, but given the way in which FINO payment has penetrated, it becomes easier for them to do this business. So cash management services is the other thing that they do. What does FINO spend on? One, interest payment on the deposits that they take from their customers, merchant payouts and agent commissions that they make, employee salaries, admin costs, the general, and then you have tech and platform expenses, which enables digital for their customers. Now, this is all with regard to FINO. So we hope we've given you a good coverage with regard to how FINO operates. Now, let's talk about some numbers and let's break down all of the 8 metrics that we'll talk about today. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of these. Let's start off with the income statement. I'm going to start with the top line. 22% growth on the total income number over the last 3 years, which is very healthy compounding that we've seen. We'll look at EBITDA here because, mind you, this is not a bank. This is not your traditional bank where you will look at operating profit. You will look at EBITDA because what you want to judge from that number, or rather EBIT or earnings before taxes, what you want to judge from that number is compounding happening there. Because post expenses, you want to see whether the company is still making money. And what you are seeing, therefore, is profitable growth coming through. 26% 3-year CAGR. That profit which has fallen from FY24 to FY25 is largely related to taxes that they've paid. Mind you, it was a loss-making company earlier, and therefore they had carried forward losses which could be offset against any profits which they made all the way through FY24. So they were paying 0 tax till FY24. Now they've started paying taxes, and that's why you're seeing that recalibration of profitability. But that likely to a significant extent is done. Now what we'll see in FY26 is a normalization. Hopefully there'll be growth from here, from this 86 crore number, and we'll quiz management on how that happens. But a 26% growth CAGR, not bad on a 3-year basis. So we've given this a thumbs up. Now let's look at the balance sheet. You look at the equity is at roughly 83 odd crore. It has retained earnings of roughly 600 odd crore, and it has some amount of borrowing. But typically, the capital adequacy is what is relevant if it converts to a small finance bank, and it has an 80% capital adequacy. So no requirement of a fundraise whatsoever, at least for the moment, unless they start taking on too much debt, which at the moment does not seem to be the case. So that's how the balance sheet is stacking up. We'll give that one a thumbs up also. It's a lean balance sheet for a 2,000 crore, 2,300 crore market cap company. So that's how it's shaping up. Now let's talk about cash flow. Now cash flow, very simple metric, right? I'll compare the cash flow from operations to the profit after tax. 86 crore was the profit after tax for FY25, 76 crore odd of operating cash flow, not looking bad. And therefore, we'll give this a thumbs up as well. I want to understand one thing from cash flow. Where is it that they are investing? Is there substantial pockets where they are investing for the next leg of growth? That's the other thing I want to understand, and we'll understand that from the managing director and CEO as he joins us. Let's quickly look at return ratios now, because the cash which they are investing needs to have a healthy return profile. We've shown you the last 3 years ROE number. We've given it a neutral because it's just about in early teens. What you would want is a ramp up of this. But mind you, there's one thing you want to understand. As businesses achieve scale and size, the ROEs start to creep up automatically. This one is a small business. It's a 2,300 crore market cap business. I want to understand whether it can achieve that scale and size, and ROEs can see a lift or not as a result of that. So we'll see how that plays out. Now let's look at shareholding pattern. So we've given this a neutral, more to be seen on the ROE front. Shareholding pattern, 75% is owned by promoters. Let me pull out that promoter holding. It's the promoters that hold this one are called FINO Paytech Limited. And FINO Paytech Limited is again owned by a clutch of companies, including the likes of an ICICI Bank as well. And then you have a BPCL as well, which has a holding in it. So it's got an interesting set of promoters with it. but this will be subject to a reverse merger as well. There will be some bit of overhang as that reverse merger plays out, but that is only post the small finance bank license being received. So a lot of restructuring will likely happen within this promoter holding group. There's very little DI or FI interest at this point. It's a small company as well. And therefore, you'll want to look out for some of these things. We'll give the shareholding pattern a neutral as well. Let's look at street cred now. The one thing that stood out for me, and those numbers flashing on your screen, is the fact that if you are an IPO investor, you've not made money on this one. And that's a possible problem, because as promoters, as management, you would want to leave some money on the table for the retail shareholder. That doesn't seem to have been the case. Maybe have been the intent, but wasn't the case. That's not played out. And therefore, what you want to see is some of that will likely either have to play out very, very quickly, or you've seen some bit of pain within that shareholder pocket, which have bought since the IPO and continue to hold. So I want to understand what's in it for them, right? Can we see a substantial ramp up in the numbers, and that likely might impact stock price? That's something, of course, that we'll understand better from management. But for the moment, we'll give this a neutral, because stock price performance not really outstanding, but just about average when you're looking at it the last 3 months or so. 24% returns is what it's given. Now let's look at how the street views this. There are 3 analysts that cover it. We'll be cautious about this one. 3 analysts that cover it with a return potential of 13%. While the returns are okay, but what really stands out for me is that there are just 3 analysts that cover it. It's a 2,000 crore company where 3 analysts cover it. So not bad in that sense. We'll give this one a cautious neutral as well. Let's talk about valuations last off. Now, 2 ways to value this, right? One is price to book, but this is not a traditional bank, and therefore price to earnings is the better way to look at this. And when I was looking at the price to earnings at 11 rupees a share, which is FY25 EPS, it's trading at roughly 25 times, so trailing 12 months. But 1 year forward is trading at 22 times, and 2 years forward it's trading at roughly 18 times. That's how the valuations are stacking up. We'll give this one a neutral as well, because not necessarily something which is very cheap, but is there an upside surprise to earnings is what I'd want to understand. Let's quickly pull up all of the ratings now, because we've summed it all up. Now let's quickly pull that up. That's what you have. No issues with regard to the first 3 metrics, and the other 4 are also a neutral. No thumbs down. If at all there's a negative bias, it's with regard to street cred. That's something you'll want to look at, because that's not helping its case at this point. But 5.5 on 8, very, very fair from a KYC ratings perspective. Let's go across. We're joined by Mr. Rishi Gupta, who's the MD and CEO at FINO Payments Bank, joining us live. Good morning, Mr. Gupta. Always good speaking with you. I want to start off by understanding where does growth go from here? You're currently at around 19 lakh merchants. Can that number continue to grow? Can you continue to penetrate? And how's the competition looking at this point? Sir, I believe you're on mute.
Yeah, can you hear me now?
Yes, I can, sir.
So good morning to you and to your viewers. So good update on the KYC, and 5.5 from my point of view looks a little low, but I leave it to you and your analyst. Coming to your specific questions on the merchant addition, I think that is an area we have been adding about 1.5 to 2 lakh numbers per annum. So we will continue to add that number of merchants as such. The only thing which has changed over the last 3 years, I would say, is that FINO was largely, the revenue and the profit was largely coming from the physical network of our merchants and the products which we used to sell through those merchants. In the last 2 years, and specifically in the last 1.5 years, we have seen there's a large push because of the UPI ecosystem which has come up. And that is where we see a digital transaction also growing to a large substantial part. Roughly 49% of our transaction value is coming from digital now. So FINO has become both a physical and a digital company now. So we have become truly a phygital company. So not only the merchant growth, but the digital growth makes it even more robust and more avenues for us also to make revenue and profits.
Hmm. And sir, how is the loan syndication business going for you? The loan referral business. Again, are you seeing competition there? How are take rates looking at this point? How is growth going for you?
On the lending part, we have applied for a small finance bank
Yes.
license. So internally, we have working with couple of NBFCs to on the lending side, largely around gold loans, micro lab, kind of affordable housing are the three, four products which we are focusing on. We do about between us and the BC business about 150 to 200 crores we do every month on the gold loan and other products, so to say. While we are growing that number, but I would still believe that with partnerships you are dependent on the partners, whether it is for the rate of interest or the product configuration or the geographies which are there. Once we get a small finance bank license, at that point of time, this learning will definitely help us to get into those businesses in a more controlled fashion where we control the product per se. So it's been a good growth, but I think the opportunity and the demand is far more as such. So we are going along with that, and let's see how it spans out in the next 9 to 12 months.
So give us the outlook on top line. I'll reserve a couple of questions on small finance bank. Let's keep that out of the picture for the moment. The existing business on 1850 crore of top line, where does it go? Say in the next year, say in the next 2 to 3 years.
So for that, you will have to probably break up this entire business into three lines. One is the entire deposit base, which is the CASA number. That CASA number, we grew at about 40% plus last year. We expect the same growth around 35, 40. The base has gone up. So from a CASA point of view, I think we'll see a good growth coming on that side. Digital also grew at a much higher pace for us in the last year, nearly 4x of 24 number vis-a-vis 25. So in that sense, we also believe that the digital number will grow, but may not be growing in X, maybe growing in some percentage as such. Our transaction business, which is the micro ATM, APS, and remittance, has seen a degrowth in the last 2, 3 years, and specifically in the last 1 year, because some of that is due to regulatory changes, some of them is due to customer behavior changing or moving away from cash to digital. And also, a lot of those customers who used to do this are now my own CASA customers. So we see a degrowth on that because there are a lot of moving parts in the business right now. As you understand, the government is also pushing a lot on the digital frauds and cyber frauds, mule accounts. So we are also taking a very risk calibrated approach. So giving a guidance at this stage looks a little difficult because of the moving parts within the three lines of businesses which we are having. And but one thing which we are very sure is, as FINO has always been very bottom line focused. So I see a good healthy growth on the bottom line per se. On the revenue side, even if we have to compromise somewhere on the revenue, but the bottom line is something which we'll continue to focus on. But our approach in this 25, 26 is to be a little cautious and take a more risk calibrated approach on the growth side, not to grow exponentially at the cost of the risk and the ecosystem which is currently we are facing in the country.
Sure. Okay. So non-committal on the top line, on the bottom line, focused. So
Yes.
would 100 crore plus kind of PAT run rate be something which is reasonable to expect?
So last year we had about 93 odd crores of PAT, where we had a 18% tax incidence. Because in the first quarter we didn't have tax. From the second quarter onwards, we started to have tax. Our target is to cross maybe 100 crores of PAT this year with the full 25% tax incidence. So partly you are right in that way. So we'll be focused on the PAT numbers on the bottom line. And so we are working on some renegotiation, some working on other businesses, some new lines of businesses, some new products as we go down the year.
And sir, what is the where are you investing your surplus cash? You're doing 100 crore of PAT now, cash much more than that. So what's the kind of thought process behind where you investing?
So two, three things are largely 95 to 98% of our investments are into technology. In technology, there are two lines of investments. One is the investments on building capacities and also security systems and everything else. With the kind of tech focus which is there within the company, and also the focus of the regulator is to build up a very very scalable as well as secured technology ecosystem. So we continue to invest in building up that scalable speed as well as secured system as such. So that is where a large part of the BAU investments are going. On the other side, the large investment which we did in 24-25, which will get capitalized in 25-26, is the ecosystem around our core banking platform and some of the whole of the core projects which we have taken up in 24-25, which we'll see in 26. So these are projects in which we are moving out of core banking platform from FIS to Finacle. So that is going to get capitalized in this year. So that's where the large investment on cash side you mentioned in your KYC presentations also is going to happen. But that is only one of which happened in 24-25.
Sure.
In going forward, we don't expect that kind of large investment to happen on the technology side per se. We will continue to add more technology platforms, automation platforms. AI is something which we are working on.
Sure.
So that is moving away from, say, right now, the payment which we do to FIS is coming under OPEX as part of our operating cost above the EBITDA level. So once we capitalize this, a large part of that payment is going to come within the depreciation. So it will move from above EBITDA to below EBITDA to that extent. And but the benefit to the company with latest technologies, latest software systems will be much more than the current ecosystem which we are.
Got it. So is there an aspiration to grow PAT? Would late teens be a good number given that you're in any case a small company in relative terms?
So I think we spoke about PAT a few minutes back. So that is what I would leave at that. Our focus will be definitely to grow the PAT even with the higher incidence of tax in this year.
Sure. So completely out of time. Thank you so much for coming and speaking with us, giving us all of that perspective. For viewers, some quick perspective. In terms of the lending, I think what he gave us is that as the small finance bank license comes, they're already doing some amount of lending or enabling lending through their current existing customer base. So they'll probably use that data to kind of onward lend as well. So maybe that's something, that's another lever that one needs to look out for. But not particularly positive with regard to growth, which was something I was anticipating or hopeful for. Completely out of time on this edition of KYC. Thanks for tuning in.